Good morning and welcome back to Market Day Report. I'm Chris Swift. I've seen a lot of volatility in the markets this morning so far. Let's take a look at the corn and see what it's doing now, and has gained a little bit more since we last talked. 443 and a quarter, just a quarter off the high of the day on the March, up 3. May is up 3 and a quarter at 453 and 3/4. And December, 477 and a quarter, up 2 3/4. Soybeans have put on a few more cents and still up 6.5 right now on the March contract at $12.75. Note that 12 handle, it's kind of touching back and forth to that. The May contract at 12.10 even, up a nickel, and the August contract up 3 1/4 at 12.10 even. Let's take a look and see what our Chicago wheat is doing. Chicago wheat this morning down 1 1/4 on the March at 592 1/4. May down 1.5 at 602 1/4. July down 2 at 607 1/2. Kansas City hard red winter wheat down up 2 now on the March contract at 620 1/4. May 618 1/2, up a quarter, and the July contract 613 3/4, down 1 3/4. And note how that spread's just barely starting to eke up just a little bit more towards the front end there. And on the spring wheat, Minneapolis 692 1/2, down 3/4 on the March. May up a quarter, 698 1/4. July up a half, 705 1/4. I want to take a real quick peek look and see what the oil markets are doing, see what the energy, I saw there's some volatility in them. And we're up 23 in the March contract, 77.01. But note the range. It's a pretty good size range right now, about $1.50 range. The April contract up 21 at 76.88. So I'd like to invite my guest in, Brian Hoops. Brian, I certainly do appreciate you taking the time to be with us this morning. Anything special you want to touch on in the grain markets?
Well, good morning, Chris. It's always good to talk with you. You look at South American production, I think that's the big driver of prices here recently. There was a crop scout noted that he left his production estimates for both Brazil and Argentina, corn and soybeans, unchanged from previous numbers. And it really, I think, indicates that because of the rains that they've seen in Brazil and across most of Argentina, their crop is stabilized. It's not the disaster that maybe we thought there once was going to be because of drought in parts of Brazil. Really, the only dry area right now is the southern tip of Argentina, and that may be enough to kind of rally soybean meal, spill over into soybeans, and spill over into corn, because there isn't that much else to drive prices here. There was state-by-state weekly wheat ratings came out. They showed a big improvement. Kansas was 54 good to excellent, versus only 21% a year ago. And the same is true for Oklahoma and Texas and Montana and Nebraska, all these states, big improvements over last year. So that winter wheat crop has been very blessed so far this winter with some moisture, snow, rain, some insulation against the bitterly cold temperatures. And, it's going to be in the 60s in the southern plains here. So we're going to see a lot of maybe some of this crop maybe trying already to start to come out of its dormant state. It needs to stay in there for a little bit longer. But right now, growing conditions in the U.S., very good for wheat and very good across the southern hemisphere as well.
And from what I've seen on the what Tim has showed us, looks like kind of moderating weather more than anything. So I'm going to ask a question here. Did we kind of put the cart before the horse when we came up with all of the new crushing processing for here in the United States? But yet what we're seeing is still not that much demand for the bean oil. Making new lows again today, and 45, 47 cents just isn't a very high price for bean oil. And I know that we're probably still a ways from getting the biodiesel, I guess, for the airline industry and for others to be on track to be able to start consuming that.
Yeah, I think that's one market I think a lot of analysts have pointed towards as being a bull market coming into 24. They had been highlighting it since mid-23 that we would be using more biodiesel. We'd be, with stocks being incredibly tight, 8-year lows, that bean oil would be the market that would really respond. It has to be probably one of the most disappointing commodities out there because of, like you said, the price is making new lows once again. It's a disappointing market. Soybean meal has enjoyed such a strong run in 2023, and it's still holding some values here until the harvest takes place in Argentina. We may start to see maybe some unwinding of spreads at some point in 24 that gives bean oil a boost. But again, that market, a huge disappointment, I think, for traders that have been expecting because of renewed biofuel demand would see such a bull market, and it has not transpired whatsoever.
Right, and I'm pretty much under the impression that we're going to see at least 4 brand new crushing plants here in the United States be operational before the year's end. Brian, stay with me. We're going to go back and take a real quick commercial break and come back and talk with Brian Hoops of Midwest Market Solutions. Stay with us. Welcome back to Market Day Report. I've seen that cattle market higher and lower both this morning, and let's take a look at it right now. And the fats aren't holding up as well. I got the Febs down 10 now at 177.27. The April contract down 45 at 180.77. Out to the June contract down 30 at 178.17. See what the feeder market is doing now. It's been kind of mixed, and it's up 205 now on the March at 240.67. That's right up on the high of the day. April up $1.55 at 246.15. That May contract up $1.12. And let's take a look at the hog market here and see what it's doing. It was a little bit firmer and still is. I got the Feb up 70 at 75.97. The April up 177 at 85.20. And May up $1.05 at 89.10. I'd like to invite Brian Hoops to come back in as my guest there. Brian, I see the feeder cattle market higher and the fat cattle market lower. That surely doesn't bode very well for the cattle feeder, does it?
Yeah, it's unfortunate that that's the direction we're seeing today, Chris. You know, it makes our calves that you're buying a little more expensive, what you want to sell less expensive. So it's the opposite direction what you like to see. I do think it's probably a lot of positioning ahead of that semi-annual cattle inventory report that comes out tomorrow. Of course, we've got today and tomorrow to kind of trade the anticipation of it, and it does look to be a friendly report as our numbers are going to tighten up compared to last year. Just not convinced the cattle futures are going to move straight higher here. We may see some correction. I think we're technically a little overbought. Trade recognizes that, along with lower box beef, is going to put a little pressure against the futures here. Maybe as we go into the option expiration delivery period starting next week, before we can see a significant rebound. But at least for today, yeah, it's it's going to be led by the feeder cattle market as we're positioning, I think, ahead of that report tomorrow.
Right, and something I'm kind of paying attention to, I know this week is going to have a lot of financial information coming out. We have an FOMC meeting that starts today and will end tomorrow. That'll tell us what we're going to adjust our interest rates to, if anything. And then on Friday, we have the unemployment report. It's a monthly unemployment report. And we've been showing a little bit hotter market for the employment than what before. So it's going to be really interesting to see how these two reports impact that beef demand. Brian, I certainly do appreciate you taking the time to be with us this morning. That's Brian Hoops. And Suzanne, we got the morning going so far.
We certainly did. Thanks for breaking it down.
It's going to be pretty wild.
Absolutely. Thank you, Chris.